Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The country's debt is now near 58% of the economy, and the Institute of International Finance says the pressure is starting to weigh more heavily on our outlook. Growth may hit 5.1% next year, but Mitsubishi UFJ Financial Group says that still falls short of targets. A reminder that the gap between plans and performance is starting to widen again. The Senate has passed the 6.8 trillion peso 2026 budget, but the noise over insertions and infrastructure spending is starting to overtake the celebration. Philippine Economic Zone Authority or PEZA investments plunged 59% in November, a drop that's starting to show just how quickly investor momentum has cooled. 2026 is shaping up as another year of below-target growth, underscoring how difficult it's been to hit our own goals. The Philippines is set to grow 5.1% short of government's 6 to 7% target for the fourth straight year. This according to Mitsubishi UFJ Financial Group. Slower government spending remains a key drag, down 7.76% in October. Analysts expect a rebound next year as the impact of the flood control scandal starts to fade. MUFG sees the peso strengthening to 58 against the dollar in early 2026, though further rate cuts from the Bangko Sentral ng Pilipinas could limit those gains. Inflation is expected to average 2.4% next year, with lower global oil prices and rice prices helping keep costs in check. Now, the country's debt remains high, and the latest data shows just how much fiscal pressure we're carrying. Government debt hit 57.8% of GDP in the third quarter, steady from last quarter, but up from 56.6% a year ago. Economists say global market volatility is pushing investors toward bonds, offering more stable returns than stocks. Household debt fell to 11.1% of GDP, the second lowest in Southeast Asia. Only Laos ranks lower. That's according to the Institute of International Finance. IIF also reports a slight drop in corporate and financial sector debt in the third quarter. The country's spending priorities are about to shift as the Senate signs off on the 6.8 trillion peso national budget for 2026. The plan redirects funds from public works to education, health, and disaster response amid intense scrutiny over alleged budget insertions. 17 senators voted in favor of the budget. Public works funding drops by 54 billion pesos, while education gets a boost, rising to 1.4 trillion pesos. Senator Sherwin Gatchalian says that the goal is better public services, along with a stronger crackdown on corruption through tighter tracking of infrastructure projects. The Senate and the House will meet in a bicameral conference from December 12th to the 14th, with all sessions set to be live streamed for the public. The investment slowdown is starting to bite, with Philippine Economic Zone Authority or PEZA approved pledges plunging 58.6% in November to 32 billion pesos. The 38 projects on the table are expected to generate nearly 10,000 jobs and more than $1.7 billion in exports. The drop comes amid weak investor sentiment driven by economic uncertainty, higher U.S. tariffs, and a corruption scandal that continues to overshadow infrastructure spending. Still, PEZA says it is on track to beat last year's total of 214 billion pesos, with pledges from January to November already reaching 207.6 billion pesos. Now, the race to clean energy is accelerating, and the Philippines is quickly becoming one of the region's most active markets. The Department of Energy now reports a massive 120-gigawatt pipeline of renewable power projects, calling the level of investor commitment unprecedented. Officials caution that turning these proposals into real power plants will require significant support, including port upgrades, a stronger grid, better logistics, adequate financing, and more reliable supply chains. Energy Secretary Sharon Garin says that hydropower and offshore wind will play a central role as the country works toward its clean energy targets, 35% renewables by 2030 and 50% by 2050. Now, manufacturing picked up speed in October 2025 this year, a sign that industrial activity is finally gaining traction. The volume of production index rose 1.4%, reversing a 1.2% drop last year. Electronics led the gains, surging 18% from September. Pharmaceuticals jumped 22.6%, and food manufacturing posted a 9% annual increase. But traditional sectors continue to struggle, with printing and recorded media, paper and coke and refined petroleum still lagging. Overall, the numbers point to a recovering industry, though the uneven growth shows several sectors still need stronger support to catch up. On another front, bank lending to small businesses picked up speed this year, a sign that credit is finally reaching the sector that needs it most. Lending to micro, small and medium enterprises, or MSMEs, hit 536 billion pesos, a 7.1% increase from last year. Micro, small and medium enterprises received over 220 billion pesos in the first 9 months, up 7.6% from a year ago. Medium enterprises got 320.4 billion pesos, an 8.3% rise from the same period. MSMEs remain the backbone of the Philippine economy, accounting for 99.5% of all businesses and providing about 65% of total employment. Now, investors are bracing for a tougher 2026 after the World Bank cut its Philippine growth forecasts, citing weaker investment, softer business confidence amid corruption scandals, falling foreign direct investments, and the impact of the recent natural disasters. The World Bank now expects the Philippines to grow 5.1% next year and 5.3% in 2026, a sign that momentum is slowing and that recovery may take longer than we had hoped. So what does this mean for stock picking, risk management, and opportunities as we head into 2026? Joining us this morning is Zerge Zandueta, the portfolio manager of COL Investment Management Strategic Growth Fund. Zerge, good morning and thanks for being here with us.
Hi, Maiki. Good morning.
Okay, Zerge, year to date, we're down by about just 9%. The price action over the past few weeks, it looks like we've started to stabilize. How does the equities market look from your perspective?
Yeah. On my end, I think what we're suffering from at the moment is a confidence shock. So in terms of fundamentals, the confidence has been shaken because of the recent corruption allegations, and we're just really trying to recover from that. Also, couldn't have earnings. They recovered for the third quarter.
Okay. Zerge, I'm going to have to ask you to hold for a minute. We're going to have to come back to this interview and fix that audio. We're going to be taking a quick break. Business 360 will be right back. Welcome back. The country's unemployment rate climbed to 5% in October. Data from the Philippine Statistics Authority showed this was higher than the unemployment rate in October of 2024 at 3.9% and 3.8% in September. This meant 2.54 million Filipino workers were unemployed, higher than the 1.96 million workers who were jobless in September. Now, overnight trading in the West is setting the tone for Asian markets this morning, with investors turning cautious as they balance hopes for an interest rate cut, potentially hawkish signals from the Federal Reserve's officials. Now, most major U.S. stocks closed lower yesterday, with the Dow Jones and the S&P 500 slipping, while the Nasdaq managed a modest gain of 0.1%. Across the Atlantic, European markets finished mixed. The UK's FTSE 100 and France's CAC 40 edged lower, while Germany's DAX rose 0.5%, supported by strong industrial data. Now, investors continue to track central bank signals closely, with the outlook for interest rates still driving much of the volatility across global markets. Taking a look at Asian markets this morning, I'm seeing a sea of red. Everything is trading to the downside. The Nikkei 225 down by 0.5%. Hong Kong's Hang Seng Index lower by 0.3%. Shanghai's Composite down by 0.5%, and Singapore's Straits Times Index down by 0.3%. Now, our market is tracking the losses across Asia. The PSE Index is down by as much, down by 0.5% to 59.49. All shares index down as well, down by 0.3% to 34.57. Taking a look at these sub-indices, all are trading to the downside except for the mining and oil counter, which is up by less than 0.1%. Total volume very thin at 63 million shares traded, valued at a very light 699 million pesos. Market breadth is, almost neck and neck. We've got 45 advancers, 40 decliners, and 65 stocks unchanged. On the currency front, the peso opened at 59.25 against the greenback, slightly down from its previous close of 59.22. Now again, let's go back to our guests. Investors are bracing for a tougher 2026. This after the World Bank cut its Philippine growth forecast, citing weaker investment, softer business confidence amid the corruption scandals, falling direct foreign investment, and the impact of recent natural disasters. The World Bank now expects the Philippines to grow 5.1% this year and 5.3% in 2026, a sign that momentum is slowing and that this recovery may take longer than we had hoped. So what does this mean for stock picking, risk management, and opportunities as we head into 2026? Now joining us is Zerge Zandueta, Portfolio Manager of COL Investment Management Strategic Growth Fund. Hi, Zerge.
Hi, Maiki. Good morning again.
Okay. All right. We're down 9% year to date, but the market seems to have stabilized over the past couple of weeks. How does it look from your perspective?
Yeah, I think the market is trying to put to bottoming type of phase here. So we're optimistic that we're seeing some basing. I think in terms of the negative news, a lot of them have already come out. So we're quite hopeful that we've seen the major low.
Yeah. Okay, we'll get back to that part. But I also wanted to ask you about this breaking bit of information we had. The PSA just released unemployment figures, and it showed that in October, unemployment picked up to 2.54 million pesos from September. What are your thoughts on this, Zerge?
Yep, I think that's not a surprise, given the economic slowdowns that we're probably going to see, especially tied to all of the flood control scandal.
Yeah. That said, Zerge, the slowdown and its impact on employment, how long do you think that this trend of high unemployment could go on for?
Probably maybe up until the first half of next year. So I think what we really need to see is some clarity in terms of the government, in terms of the governance type of policies that they have in place, so that a lot of the projects could restart and begin. So I think right now, given that the budget is in suspense, since the government is trying to get its act together and plug the leaks, there's a lot of pause at the meantime. So I think once we see clarity on this front, maybe we could see the employment pick up again.
Yeah, okay. Zerge, the World Bank has cut its growth outlook for the Philippines to 5.1% in 2025 and 5.3% in 2026. From where you sit, has the market already priced in this weaker trajectory?
Yeah, it's highly likely that it's already been priced in. So if we watch the Philippine peso, it has actually reflected that by going close to 60.
Mm-hmm. You think the worst has passed with all of the allegations of Zaldico reaching to the highest echelons of our government? You think all of that negativity is already behind us?
I am hopeful that they have, but I think what we need to see moving forward is concrete steps from the government to really correct things. And I think we need to see corporate earnings to really recover.
Yeah.
But yeah.
Yeah, so the negative price action has been priced in, but we also need to see accountability from the government. Zerge, on the accountability front, do you think the PSE, the SEC, the government's economic team, do you think that they've thrown everything that they can at the PSE index? We've been down for a very long time. It's not just this year. It's not just the year before. We've been down for over a decade. Do you think that they've done all they can at this point to revive and lift our market?
Yeah, I think they're on the right track. What matters now moving forward is really the implementation. So what happened recently, at least in terms of the news flow, it looks like the PSE is trying to relax rules for IPO listings. So definitely that's something that could help. in terms of the Department of Finance. A new person is in there, Mr. Frederick Go. And at least as recent interviews, it looks like they're really going to try to take concrete steps to help revive the economy. So I'm quite hopeful on that front.
How do you think the market, interpreted the reshuffle in the cabinet with Dec Go as the head of finance now?
Yeah, I think that was viewed very constructively. So if we watch how the market was trading, we saw the worst day for this year on that day that Zaldico mentioned that there might be some involvement from the president in terms of all of the allegations. But if you look at what happened the next week, saw a sharp recovery, and that actually was along the lines of when Frederick Go took up the DOF post. So he's a practitioner. He's been in the industry a long time. I think, yes, we have a constructive outlook in terms of what he might be able to do.
Okay, that's good to hear. In terms of interest rates, the Fed is expected to cut, U.S. Federal Reserve is expected to cut interest rates tomorrow. The BSP's Monetary Board meets tomorrow as well. Expectations are for 25 bips in the U.S., 25 bips here at home. At this rate, do you think the BSP might be cutting rates too fast? They've already cut rates sharply. They've been cutting rates since August of 2024. Do you think perhaps this might be all too fast?
Yeah, it actually feels fast, but our BSP is in a tricky situation. They have to kind of walk the tightrope here. They really need to help the economy because there are signs of it slowing. So as proven by the unemployment figures just ticking up and the GDP coming in at 4%. So they really need to do something in order to help the economy.
Yeah, so from a portfolio perspective, this is just the right pace.
Yeah, the important thing is they actually just need to match what the Fed is doing. The risk is if they do something different.
Tight on time. Last question, Zerge. How do investors make money in a market like this? It's really the short-term plays. Well, what are your thoughts?
Yeah, market is very tough, especially looking into next year. The best way to defend is to be defensive, actually. Just buy stocks that pay you a good yield as earning profiles that are resilient. So buy the dividend-paying names.
Okay, Zerge Zendueta from COL, thank you so much for your time this morning.
All right, thanks so much, Maiki.
The Philippines is already laying the groundwork for its biggest diplomatic role next year, taking the lead of Southeast Asia at a critical moment for the region. The Asian Development Bank's president, Matsasugu Asakawa, met with President Ferdinand Marcos Jr. to align support ahead of the country's Association of Southeast Asian Nations, or ASEAN, chairmanship in 2026. The meeting signals strong cooperation moving forward, with the Asian Development Bank pledging assistance to boost competitiveness, resilience, and sustainability as the Philippines prepares to set the regional agenda. Last month, the president unveiled the Philippines' ASEAN theme for 2026, Navigating Our Future Together, focused on peace and security and prosperity and people empowerment. On another front, a new leader is emerging on the Philippine Stock Exchange, and it's coming from the port sector. International Container Terminal Services Incorporated, or ICTSI, has reaffirmed its position as the PSC's most valuable company, with shares hitting a record 600 pesos each. The Razon-led ICTSI now carries a market cap of about 1.2 trillion pesos, making it the only Philippine company today with a 12-digit valuation. From its pandemic low of 74 pesos in 2020, the stock has surged ninefold. The all-time Philippine market cap record still belongs to SM Investments at 1.4 trillion pesos set 7 years ago. SM Investments is currently the third most valuable local company at 868 billion pesos. Now, as we close out the year, it's easy to get caught up in the headlines, the challenges, the corruption probes, the market volatility. But amid everything, one question stands out. What keeps us rooted in the Philippines, and what makes this country still worth believing in? So I asked some of the country's top business leaders and ambassadors one simple question. What do you love about the Philippines? Throughout December on Business 360, we're sharing their answers, reminding us of the strengths, the values, and the stories that continue to define our country. Today's featured voice is a diplomat who has been building bridges between Israel and the Philippines for years. Dana Kirsch, Israel's ambassador to the Philippines. Here's what she loves most about our country.
Wow. To have 1 minute to speak about why I love the Philippines, it's not enough. So I'll try to be concise. I have 3 reasons: people, landscapes, and culture. The first one is the people. From the moment I landed in the airport, I saw the wonderful heart and smile of the Filipino people. Hospitality, compassion, and resilience. That's the combination, and it's amazing to see how wonderful the Filipinos are. The second thing is the landscape. You have more than 7,000 mini heavens that I have to explore as many as I can throughout my posting here. And the third one is the culture, the heritage, the arts, the people, and their food is divine. So I feel privileged to be representing the State of Israel in the Philippines, and I'm looking forward to creating more and more partnerships between the Filipino people and the Israeli people and government. Thank you. Maraming salamat po.
And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BMC, the Bilyonaryo News Channel.